Pound to euro exchange rate live. Sterling soars after Article 50 triggers Brexit. Prime Minister Theresa May signed the letter to trigger Article 50 last night, formally signalling Britain's exit from the European Union, EU, and this afternoon it was delivered to Donald Tusk, the European Council President. The triggering of Article 50 means the UK will begin negotiations to exit the EU, a process which is supposed to take 2 years but could take even longer. In response to the events, the pound fell sharply against the euro this morning, plunging from 1.15,771 to the pound to lows of 1.14,532 overnight. But over the course of the day, the pound has recovered and risen steadily. Currently the exchange rate is 1.15,881 to the pound. However, it is likely that sterling will remain volatile against the world's major currencies. Following the invocation of Article 50, Harish Duftra, CEO and co-founder of Rational FX, told Daily Star Online, after a relatively positive start to the week the pound has stumbled as Prime Minister Theresa May invokes Article 50. As the Prime Minister signed the letter formally notifying the European of the UK's intention to leave the EU, the pound slid despite the strength it had shown against the dollar and the euro in the past few days. As anticipated, analysts can expect a number of fluctuations in sterling in the days to come. He continued, with the prospect of Brexit long since affecting the pound, there is a chance that triggering Article 50 will not have as extensive an impact on the currency as the referendum result. Furthermore, the possibility remains of a rise in the pound as negotiations get underway, as seen earlier in the pound's rally when the Prime Minister initially announced the date of triggering Article 50, and also due to the fact that markets will have more details over the nature of the UK's departure. Analysts and investors will be watching very closely at how the pound reacts over the coming days. Before today, analysts predicted the actual triggering of Article 50 would have a modest effect on the pound, based on the belief that Brexit uncertainty has already been priced into sterling. The pound even begun this week with a 7-week high against the US dollar, which leapt to $1.26,098 to the pound. The pound was also up against the euro by 0.3% to 1.15,713. While there may not be a significant impact right away, it will be the US response in the coming days that will be more telling about the future of the pound. Harish said, whilst there may not be a slump as dramatic as witnessed in the immediate aftermath of the Brexit vote, the continuing uncertainty around negotiations could see further volatility in the strength of the pound for the foreseeable future. Another crucial notion is whether or not the pound will be able to recover once Article 50 is triggered, as some analysts predict that parity with the dollar or even the euro is within sight. But what does the triggering of Article 50 mean for exchange rates, your finances and your travel money? Simon Phillips, retail director of Britain's biggest high street travel money specialists Know One Currency, told the Daily Star Online, the hard work of Brexit negotiations starts now, and with everything still to play for, the resulting uncertainty will continue to make exchange rates prone to big swings. Trying to second-guess which way exchange rates will move in future is almost impossible, but there are ways that holidaymakers can be savvy when buying foreign currency. When changing your sterling, always shop around for the best rate. Alternatively, if you're yet to book a holiday, you could consider going somewhere further afield than the Eurozone where your pound will stretch further. Meanwhile, money-saving expert Martin Lewis has issued advice to holidaymakers about when is best to buy their travel currency. He said, "The question I am being asked all of the time, should I buy my euros or dollars now before Article 50 is triggered? Well, we know when Article 50 will be triggered, Wednesday, the 29th of March. If we know, the markets know and the currency traders know. If they know something, they have already factored that into the price. So, the date Article 50 is triggered is actually, relatively, meaningless for currency moves. Yes, it might move on the day probably because of other reasons, but if it does move we want to know if it will go up or down.